9.9% monthly return trading options on a $50,000 account. I want to show you the exact trades that I placed this month that actually make this possible. So, what we'll cover today is number one, how to actually get such high returns using both options and stock. I'll go through the exact trades I placed, and I'll also show you how to choose the right trades because getting a higher return like this requires timing above anything else. So, first and foremost, not financial advice. This is simply what I am doing and have done based on my own goals, risk profile. Don't copy random strangers on the internet. That doesn't end well. Do your own research, make some decisions, get good at managing your own money. So, the first thing I want to cover is how we can possibly even get such high returns because selling puts on its own, you'll get roughly a 2% return if you just follow the typical it's a red day, sell a put with a 30 DTE. The problem is that it keeps you stuck in that trade for 30 days. The reason why I really dislike the advice of just sell on a red day is because red often comes with more red and more red and more red. So even if you end up okay on your trade, you're just in it for a very long time. The solution, though, is that we enter rather than on a red day, we simply enter when the technicals say the next most likely move is up. And then once we get that move, we either exit early so we can redeploy the capital or we move the strike up so we can get more premium. I'm going to show you an example of both of those different scenarios that played out for me this month. Now, the goal with a cash secured put is never, ever, ever get assigned, all right? The reason why I don't like getting assigned on a cash secured put, especially in a small account, is that it literally takes money out of your trading balance, right? Now, yes, if you are assigned, you can potentially then sell calls, the whole wheel strategy. The problem is if you're assigned, you're already underwater, which means that if you can sell a call, you're probably selling it at a strike that's substantially far away from where you're trading just so that you're not selling a underwater covered call, right? So when we're using a small account, our number one goal is to keep every single dollar in play, right? I'm not saying don't buy stock. We have to buy stock at some point. You'll see that shortly as well. But you are far better buying stock when you want it rather than getting assigned on a cash secured put because you will never be underwater if you buy stock today at today's price. You will always be underwater on a cash secured put that's assigned because there's literally no other way to be assigned unless the current trading price is lower than what your assignment price is, right? So, how do we actually go about getting high returns then if we can't do it all off of cash secured puts? We need to include leaps and or call options and capital gains from stock appreciation because you can't get high returns on a cash secured put alone. The other thing is use your entire account and use it over and over and over again. When people say, sit 30% on the sidelines for the dip that might come, that's great if you're working with $1 million account, right? But when your goal is to obtain income from an account, you need to be using your entire account. And the other thing is on a small account, I personally, you do you, but I don't subscribe to the 10% per position maximum. I would rather a good trade over a cheap trade. And I'll show you exactly what I mean in literally 2 seconds. I'm going to show you the trades that I took, right? So with that in mind, let's come and have a look at the trades in this account this month. Now, I'm going to continue to share this with you. When I first started doing this $50,000 challenge, the goal was to grow the account. But since then, what I've realized is that people are more interested in income that they can do something with as opposed to growing an account. So, what I'm going to do is I'm going to continue to run this through and share it with you guys regularly, but I'm not going to be compounding any of my return, right? So this is all as well only from trades that were physically placed this month because I wanted to show you that it's possible to do even without having the trades rolling in from last month expiring this month, right? So we started with a cash secured put on GLW. We received initially $4.50 per contract or 450 at a 145 strike, and I closed it early. So here my closed amount is the amount that I actually closed out that trade for. Filled amount, price is what I originally received for that contract. So that's why you'll see a bit of a difference here. So already this one trade alone at $14,500 worth of capital on a $50,000 account, some people would be freaking out, right? That's too much. That's too much. And then I added to this a cash secured put on BE with a strike of 220. So that's 22,000. So already I've got a lot of my account in at this point two trades. That's it, two tickers, right? The reason why I was comfortable in doing that, and I'll show you the charts in a moment. So I opened this on 5-1 and I opened BE on 5-6. Where's my charts? GLW 5-1. 5-1. Here we go. It's after earnings. We'd started to move up, right? So I was comfortable on this trade that I don't have any earnings risk, right? And this is the only time that I would enter in what would be considered a heavy position, right? I'm not going to do this pre-earnings because that could easily turn to pear-shaped, right? So after earnings, we had a drop. We started to recover. I was like, okay, I'm happy with this. I don't expect any news to come out. All of the news that gets released on a stock is released after earnings. The analysts had started to release their new expectation for the 12 months. And I was like, okay, I'm not expecting downside here. So I entered on this day and I ultimately ended up getting out of it earlier when we rose up here, right? BE, I entered, was around here somewhere. So again, after earnings, not expecting anything dramatic, had a nice safe strike that was all the way down here where we were pre-earnings. So when we jump after earnings, sure, we might fill this gap, which we ultimately did, but I wouldn't expect it to come down to a level below where we were pre-earnings, right? So I'm always thinking through these things before I make the trade, okay? Put credit spreads, an easy way to get a little bit of money, right? A quick put credit spread, taking around about 50% profit, closing it out. Another put credit spread, I still had small amounts of money left, right? Quick little $50 here. Now, Credo, you can see, started as a put credit spread, right? And it ended in a couple of different amounts of profit. It ended in a $1,048 profit initially because the spread went against me. I'd planned for it. There's a whole video on that. I'll link it below. I won't explain it here. But just know that this turned into initially a profit of 1,048. And then here, so blue is what I still have open, right? I rolled the sold part of my spread. And in doing that, I received more credit. I have since continued to roll this strike up, 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 up. So this is why when I talk about roll the strikes up, don't just sit and forget, set and forget. So on 523, I rolled from 155 to 165 and received another 202 credit. Today, that should say 530. Today, I rolled to 185 for another 435 credit. So rather than just letting that 30 days sit at a credit of whatever I received in the beginning, I can't remember, maybe 300, something like that. As the stock's moving up, I'm moving my strike up. And as I'm doing that, I'm actually locking in profit along the way. So closed amount profit that's already locked in is 297. Profit yet to be collected because the trade's still open is 861. Right? So if this expires worthless on 618 or if I can close it out sooner, then I've still got another $861 to collect in this particular trade. DRAM, a couple of cash secured puts, closed out. CLS, a put credit spread. This one closed out in a day. CLS was open for a whole day. Why? Because the charts told me that the next most likely move is up. I did another one on GLW. I entered last week for expiry today. I closed this one a day early. I closed it yesterday rather than letting it go to expiry because I saw a better option, right? What did I see? I saw that IGV was starting to break out. So I wanted to close out my risk on GLW because we'd had a little bit of a down day. And I thought, you know what, if we come back down again today, I don't want to be playing around with that. Let's just lock in this profit and move on. So I was able to get a stock position in IGV. So I've bought 100 shares at a cost of $95.75 per share. So the total I've got in this trade is $9,575. And already, so this is not realized, of course, already as of now, that stock price has moved up and I've got $606 worth of unrealized gains. The other trade that I want to bring your attention to is the leaps here on APH, right? Again, I was looking for where's the opportunity, and I'll show you the chart of APH in a moment as well, but the point of being able to grow a smaller account is always having those eyes of where's the opportunity, what's about to run, what's maybe already had its go. I didn't get back into GLW this week because I feel like it's got a bit of downward momentum to it at the moment. But APH, I bought a Leaps for $3,950 and I sold it just today for a profit of $1,680. So I was in that trade for 13 days, right? This is why we need to cycle our money over and over again. This is why we need to also include other trades, things like leaps, things like stock, because that's where the bulk of the profit will come from. Now you can see down here in total, over the month, I used $123,000 worth of capital. So I used every dollar 2.5 times. That's how you get the higher returns. At the moment, so I've got 18,500 in Credo. I've got 9.5 thereabouts in IGV. So I've got 28,000 deployed at the moment. And next week, I've got, of course, 22 odd thousand there to place more trades with, right? All up, closed out for the month of May. They look like price tags, don't they? $4,997 closed in profit, a 9.99% return, right? If nothing else happens, if I don't want to reinvest my profits, I can take that money. I can live off that money, right? The key is to just check your charts, right? Make sure your charts are pointing in the right direction first. Make sure you have a plan for the trade. Make sure you're going with the money. Where's money flowing now? Software. Why did I get into IGV? Software, right? Let me show you what I saw yesterday on both of GLW, why I switched from GLW, right? So yesterday, I closed out GLW because I was like, oh, remember what I say about red? We don't sell cash secured puts on a red day because after red is likely more red. So I knew that yesterday and I was like, after red is likely more red. My strike was down at 175. I didn't want to continue to be in this trade if we were coming down lower, right? So I got out of that. And the reason why I haven't gone back into it is because we're now starting to make lower highs. So this is on my list of We'll just put it in our back pocket. We won't trade this right now. We'll just wait and see what happens. IGV, though, yesterday told a different story. Yesterday, IGV was telling a story of breakout, right? So I took my money from, this one might not be going according to plan. Maybe it'll get assigned the next day, maybe it won't, but I don't want to sit in it. If I can give you guys one huge piece of advice, it's don't just sit in a trade because it's got some time left and you might. I had another $50 worth of value to extract from that trade if I stayed in it for another day. Instead, I took my money out of that trade. I found the better trade. I placed it, and now I'm up $600 just like that. I could have sold it out today if I wanted to, right? But the same as red often follows red, often follows red. After a big green day like this, usually more green follows. So I'm going to hold on to this trade, right? If I can ride this trade back up to all-time highs, which isn't out of the realm of possibility, I ride it from $95 to even $115. That's a month's worth of income just there. So I hope you guys found this helpful. I'm going to continue to share this tracker every month, the trades that I put into this account and how I just continue to use $50,000 over and over and over and over again. I also have, if you're interested, there's a link down below for a wait list for the 50K Club where I will share these trades in real time. I will explain my positions on them. I will, share everything as I'm going through it for this particular strategy. 50K just generating income over and over and over again. So if you're interested in coming along for that ride, register your name on the link below. And once I've got that all up and running, I will send you an email and let you know about it. All right, have a great weekend, and I hope your trading week went well. I hope you were able to make a nice amount of money from the markets.